Okay guys, this is going to be a long video, but we're going to go very in-depth, starting from the most basic of Fibonacci retracement to advanced, and at the end I'm going to give some examples. I'm going to do my very best to be as slow and concise as possible on this. So, without further ado, let's get into it. Fibonacci retracement. So when you pull up your Fibonacci retracement tool, you're going to find it right here. Okay, Fib retracement. Couple things. You want to have your magnet on weak. Okay, that's what I recommend. Let's take a look at our settings that you will see on the default. Okay, so you're going to see this when you pull this up initially. Okay, now what this is a lot of stuff that you don't need. Alright, I want you to ignore this. I want you to make a template. And these are the fibs internally that matter for a range right here. Okay? So pause the video if you have to. You know, this should be your standard Fibonacci template for internal range. Now, when I'm talking about when price action is internal of a range, here's what I mean. Okay? So let's take this fib pull. Okay? So essentially, when price action moves outside of this 886, so this level, just put the levels on for you, this 886 here, past that is essentially price discovery. So when price moves past this 886, it is now external. So externally, the fib levels that we need, and you can go ahead and pause this video if you want as well. When I talk about the Fibonacci expansion, these are the levels external of that range. See, you see how this is just, this gives us prices that we can predict for new highs, new all-time highs. And inversely, all-time lows if we were to do the fib pull from the low to the high. Now, I'm getting ahead of myself, but I want you to pause that video and get these standard fibs first. Make sure you make yourself a template of this. And let's go ahead and talk about this little button at the bottom. You want to have this clicked on. You need to make sure this is clicked on all your templates. Fib levels, in case you're using log scale, your fibs will be correct, log or regular. Okay, so let's get into this. So basically, couple of rules here. Alright, let's talk about rule number one. We're always going to be pulling from wick to wick, okay? So if we're looking for resistances, if price is going up and we want to know where there may be a stopping point, it's always going to be from the high to a low. Okay, so for price action coming up right now to where we are, just for example, and I'm going to show you the correct fib pull, we're going to be taking the high down to this low. Now look, what I did here was, let me backtrack because I want to be very thorough. What I'm doing here is I'm clicking on this candle, and so if you see me doing this, coming over, and I'm starting it from here, just know that my crosshair is aligned with this wick right there. Okay, I don't have to be dead on it. I can be over here even if I wanted to, as long as I know I'm aligned with it. But I would say, as a beginner starting out, put the magnet tool on, click your wick, and then you can see that I'm targeting the absolute low. So just know that the most important part of every fib pull is the very first click, because you're finding so no matter what, the second pull is always going to be, the second click's always going to be the low of the move to the right or the high of the move to the right. It's always left to right, okay? Always left to right, always, okay? You can see this CC right here, just for example. Let me resave this right quick so it shows the levels correctly. You can see the 618 has been stopping this price action. As I've said in the past, the 618 to 66 is the strongest level of resistance and support of assets. So, hope I'm not getting ahead of myself here when I tell you that rule number one, It's always wick to wick, okay? If there's not a wick, of course, you go to the candle body. So, that was our resistance pull from high to low. Now, looking for support. We're going to go from the low to the high. When price is coming down and we want to know where it's going to bounce from, we're taking a fib pull from the low to the high, okay? And I'll do this exactly like you should. Boom, you see? That's the high I'm going to. The reason I move over is so we can see the price right there. We can see it extended a little bit, okay? With that said, so 2 rules, 3 rules actually. Always left to right, always wick to wick, and if you're looking for resistances, it's the high to the low. Supports are low to high, okay? Hope I'm being clear on that. Now these are standard fibs internally that we need to pay attention to. Now, let me trim this fat off for us right quick, because I'll get into some of these later. But right off the bat, I'm going to take this away, and this away, okay? And these 4 levels, ladies and gentlemen, are the most important levels that you have to worry about, okay? Now, I'm going to get into the 382 and the 236 later. Truth be told, the 0.5 is just meant as a midpoint, okay? Do I ever trade off of it? I never trade. You will never see me trade off the 0.5 ever, and I never have it up, first and foremost. Okay? So, let's get into this. The question I get the most is, how do I know I'm on the correct fib pull? So, let's take this for example. You know how they always say it's the high to the low? Well, it's not always the absolute high to the low. Okay? I want to talk about something called impulsive candles. And this is an impulsive candle. See how this drastic move to the downside? This was a very impulsive move, meaning a very fast and a lot of volume was in it, okay? So candles like this little candle here or so, that would not be considered like an impulsive move. Now, this is impulsive. Now, what the market wants you to think is that it's going to be from the absolute high to the absolute low. That's incorrect. The only way I can explain this, I'm going to give you this example right here, okay? You want to know why price action is being stopped right here? Okay, well that's because our fib pull, if you were to before this video, you would be thinking that this high would be the correct fib pull down to this low. But actually, that's not it, because you would be waiting on it up here. What is stopping this price right here is, and like I said, I've always had a hard time explaining this. It's generally an impulsive candle to the right of a high. Okay, and so it's not going to be this one because that's not the high. It's going to be this one right there. Okay, and so these fibs work on any time frames. Okay, I mean, we can do this on the 1 minute. This is how people scalp on the 1 minute. I'm simply going to be showing you long, like, swing trades and stuff, and how you can find, because the majority of the market is trading longer term. Big money is trading at higher time frames. Okay, so they're going to be using the weekly, the monthly, and the daily as where they're going to be respecting and perceiving these fibs to be correct at. Okay. So look, if we were on the daily here, I want to show you this on the daily. Okay, so hope I'm not getting ahead. I'm trying to make sure I'm covering everything here. Okay, so for instance, we have a ton of so here's our low, right? But look how little weak that candle is. So let's say we had this massive rise up, right? Well, when it retraces, we want to know, dang, how could we have ever caught this right here? You know? So, if we pull from that low up to this, now look, we're going to imagine, let's just imagine that this is not here yet, okay? I know this is tough. Just imagine, because I want to show this area right here, how we got this as support, okay? Now, remember when I told you guys that the most important levels that you know are this? I'm gonna tell you the most important. It's the 618 and the 66. These two right here. More often than not, the 618 though. All right. And if there is a move past the 618 to 66, and we could even see price action come through the 66 a little bit and come back down. But if we have a clear shot through the 66, expect the 786 to be hit. Okay. And if it goes past the 786 and the 886, it's going higher. Okay, it's going external. So, with that said, if I was going to pull from this low to this high, right here, I'm targeting this high right there. Okay, you'd be thinking, oh dang, well that's not the, how can we find this is the incorrect fib pull. So what I want you guys to be doing is, and here's how you find it, okay? Here's how I began my journey of finding these. So once you find the, now remember, we're imagining this is not here, because I'm showing you where this came into play right there. Because if truly we should be taking it from this high, okay? But we're imagining that price action hasn't gone there yet. So you'd be thinking this is right, but now look, it's not, okay? And so here's how you do this. That's such a hard thing to explain. Once you establish your second fib pull and you establish your absolute high, okay, you establish your high, you can take this fib pull and move this to each candlewick you want, okay? Now, do you see how large this candle is right here? Okay, let me zoom in. It's larger than all the rest. This is an impulsive candle right here, and this is what the market has targeted to be. I know this might sound confusing. This is what the market targeted to be the correct fib pull. As you can see, look how well price action was supported. And you know what? I need to show the 0 and 1. Okay, that way you guys know where we're at on this. Forgive me, I'm not the most prepared. Save this. Save as CC. Cool. So we just note that the 1 notates always the first fib pull. All right. So you finding this impulsive, I can find this because without going up into higher time frames. Now you as a beginner would need to go into past the daily into the weekly to find that. Okay. Now let's go back to that right here and show where that was. See how much larger this candle is? That would be our correct bottom up to our high, and look at this 618, just beautifully bounced and has gone higher. Okay, now if we were to go to the weekly, what do you see what that would look like? Much easier to see. Less candles, and you can see that this is the pull right there. Now you could even argue that that could be the pull because there's 76 support. But so this though, and like I can't tell you with confidence that this is the correct one or this is, because they both are showing bounces there, but I am tending to believe that this daily candle, because it is the largest out of these, is the correct one for this. So it supported here and went higher. Okay, now do we still use this same fib pull when we want to see where price is going to come down here? And the answer to that is yes and no. Okay, more no so because we want to, it's been washed out already and this level has already been supported. So we actually want to find our next low that's local to this area here. Now we're going to show here. Okay, so essentially these are the same bottom. Okay, I'm going to take this bottom up to this high, which is right here. Okay, so all I'm doing is targeting that high. Just know that I'm moving it over with my crosshair. And there you go again, ladies and gentlemen. You can see this CC price came up, boom, back tested. Like I said, it is a leading indicator. It is an accurate predictor of this is traders all over the world use this and have respected these levels. And so that's the best I can give you on how it works and why it works, but we're not even scraping the surface on this yet. So I've just shown you support and how we can, how it's not always the absolute low of the move. Now, let me give you an example and a kind of just not so much a trick question here, but so if price falls through all this, let's say we lose this CC, we lose 886. Oh no. Well, where do you go from there? Well, guess what? So we actually do come back to where we were before, and we're like, dang, we hope this holds, you know? So, should we lose this? Oh no, should we lose this? Then yes, we do want to be at the very bottom, you know, because these fib pools, these levels will get washed through from time to time, and you have to find it on the fly, you know. And so that was support. Now let's go into resistance. And now look, none of this is planned or prepared. So I'm gonna do this in real time. So how I go about this, I'm just gonna show you. So I'm gonna find out where our resistance is. Now I like to start from higher time frames. Okay, that way I see the candles here much easier. There's less of them, and I can see. So for me, remember, resistance is high to low. So I'm gonna just start with this one first. Pull it down here. Okay, so I can see prices have come up to it yet. Well, that to me is not showing why we've stopped there. So I step this down to this next one. Then I'm like, okay, that looks good, but we need to go to lower time frames so to see what we're looking like. And that's how I know, because I can take a look at all these candles right here. I can see that, boom, this is the impulsive candle right there that we're on, you know. And I know I'm on this little bit higher one, this wick is a little bit higher, but look to the left of this candle right here. This large impulsive candle is the one stopping this price action right here. Okay, amongst other confluences, you know. So again, one might think it's going to be, oh, right here. Now, I want to be very clear. If we lose this, if we lose this 618 right here, I would then be expecting 786, but I'd also be looking at this fib pool now, because we haven't yet to come up to it. Okay, we haven't come to this yet, and so let's show something else. Okay, let's see. Let me just take this right quick. Okay, so we've established this high, this absolute high, which is called the global high. This is called a global CC resistance. Why? It's because it's the absolute high at the absolute low, which is right here. Okay, so since December 2018, we've known where the highest high is going to be, aka the 886. Okay, since 2018, we've known where we're going to find the most resistance at, because look, since it's the absolute high to the low, it's going to be a stronger fib pool than any other. That's why we call it the global. Alright, so I want you to see what happened when price actually come up through here. So ultimately it did break through this 66 and 618, and then you can see a bounce off of this 786 right here. Like I said, altcoins love the 786. You can see, boom, it hit the first time it hit the 786. Look what it did. We had a 36, I can't get this right, a 36% move down back to here. Okay, so great trade there, but ultimately it went all the way up to the 886, which is our last line of defense, and you can see that bears did not allow this to go external of this and find newer highs. So like I said, this 886 will hold. These are the four most important levels. Yeah, I just want to show you how that was respected right there, resistance wise. Trying to think what else I need to cover. There's just so much. Let's maybe go into, let's just go into other examples. Maybe let's just see. I don't know. I just want it to be like completely random. I'm just gonna hold spacebar down and see what we get to. It'll probably be some crazy. Okay, ETH. There we go. Well, just some crazy. ES1. No, these are all stocks. Sorry, hold on. let's just do 1 inch. Cool. Let's clear all this out the way. 1 inch on Bybit. Alright. So let's take this. This is a relatively easy one to show this resistance right here. Alright, how I go about it? Boom. I'm going to start with this high right here. Down to that low. Alright, and so I can see that, yeah, it's good, but very sneakily. Now, they want you to miss your fib pull. They want you to market. The industry wants you to miss this. So this would generally be the one you would think. So oftentimes it'll be one that's like, and I know this is the impulsive one. I know I said, okay, watch for the impulsive. So oftentimes you'll find this is why this is so hard to teach. Oftentimes you just have to be. Comes with experience. You have to know that this is actually the right fib pull, and you can just see it right there. Okay, right here. Yes, it's come through a couple times, but we've cleared this. You can see that there's been closes above this multiple weeks. That means it should have went higher. So showing this, it hasn't cleared this yet. This is the right fib pull, and this is where this gets really confusing. You know, you just have to pull enough of these, and then you guys are just gonna have to field questions. You just have to ask me, is this am I on the right fib pull or not? And I'm gonna have to do just like CC did for me, and let me know if I'm on it or not. Okay, guys. Inversely, let's see. I'm gonna go to 1 inch, but I want to show. Let's just keep showing examples. Ave. All right, so let's just show Ave. I'm gonna go from the very bottom. We're gonna look for support this time, okay? All right. Now I've shown resistance. I've shown support. Remember, resistance is from high to low. Support is from low to high. Now, you remember those levels that I was talking about? They were like, okay, we're gonna get into those later. So let's talk about the 382. All right, and let's just talk about the 382 for now. All right, the 382. So when price makes a major rise up, okay, and is on an uptrend, and it hits a top and then retraces, okay, where do we know that it's a good spot to where a good spot for support is? Our first line of support from a move that has gone really high up and is now retraced. Well, people wonder how far is it going to retrace. Well, the first move will always be the 382, but you have to find the correct 382. I'm going to explain here. So this is on all assets, on all time frames, but I prefer the higher time frames of this. So I'm going to show you, like I don't have any of this planned. Okay, I just clicked here to Ave. I'm going to show you how we knew Ave was going to stop right here. Okay, now I want you to take a look at where we pulled from this low to the high. Now, you would have missed this bottom had you taken the absolute low to high. Why? It's because the market doesn't want you to know that it's actually, when you find the low, it's really, you got to staircase it up to look at that, ladies and gentlemen. Do you see that large impulsive candle, how large this is? And I tell you, the impulsive candles are the ones that count. So this would be our first fib pull, and take a look at this 382 and how beautifully price went up to the top, came back, retraced this. We had an instant bounce back up here, and look again, 382 bounce. Now we have a rule here, and I hate to show this. I don't. Yes, I do. I can show this. Yeah. You know what? No, I'm not going to show it because it would be plagiarizing or stealing material. I'm not going to get that. Just know that there's been stats run on this by CC, Chart Champions, and Daniel. We've run this for years. If this 382 is lost as support, there's really nothing in between here. If we're on the correct fib pull, this is going to come down all the way to here, to the 618. That's our next line. Ignore the 0.5. This does nothing for us right there. I'm telling you, expect the words out of, if you look on page 180 of that PDF that I showed you in the group, I think the direct quote is, if the 382 is lost to support, expect the expect the CC to be hit, the 618 or 66, and it does. Okay, so you can see that 382 acted as support because we have the right fib pull right there. Okay, it's not this little small one, it's the large impulsive candle. Okay, hope that makes some sense to you guys. Okay, let's continue on. Let's just hit spacebar a couple times and just go some more examples. Okay, beautiful. So we're on the monthly chart, right? So I can tell you, where's the impulsive candle, guys? Is it this one? Is it this one? Is it? Oh, hey, big, large impulsive candle. This is our one right here. Okay, there she is. Boom. That's our first start fib pull up to that, and would you look at that? Look at the bounce. Look at the respect. Okay, come right here. Boom, we bounce and look. They slightly faked you out right there. And if you go down to if you go to a little bit lower time frames, we can actually hone this in a little bit better. You know, we truthfully could. We can hone this in, but if when in doubt, the higher time frames will generally always show you right there. Look, support came back up, a nice 60% move, easy as support. So likewise, let's imagine this isn't here because we haven't come up to a resistance point yet so far. I wanted to show you like macro stuff. Ignore, like I want you to ignore that this is here, not here. So let's find our resistance now because I just showed you support. I just showed you we were support here. Now resistance. Imagine this coin comes on here. We have our high here, okay, and we have our low. So we pull here. Let me get this out of the way. Alright, so I shouldn't pull it all the way over. I should just pull it right here. Okay, so here, people think, oh, well, that's really the one. Well, not really. So look, once we have this here in place, unfortunately, I hate to say, and there's no real way of explaining why this. Why? I think it's just because they want you to be on the wrong impulsive. So this is gonna be hard to show you this, but ignore. Let's see if we can just do this right here. Boom. Let's get that out of the picture so you don't see any of that. Okay. So, or even there. So I took it from. If you were taking it from this high, yeah, there's just that could be it. But ultimately, you're gonna find more often than not, it's gonna be to the right of it. I don't know why. If you have a high, look for a candle that's strong, that's decently impulsive to the right of it. Igor taught us this in CC, and ever since, see, we went all the way up to the 886 here. Okay, and then boom, we crashed all the way back down. Look at that. 65% down. Okay, there was our resistance. Okay, I'm gonna keep going to the examples here. I'm gonna go just take anything. Okay, ants. Let's take ants. And so we find other confluence with this as well, right? So I just want you to know that. Let's just take ants high to its low. Okay, so look what stopped. We're on the monthly chart, guys. Okay, monthly. So look for 1, 2, for 3 months. Rejection here at this 618 level. Now try to get through it here again, and it's close, but still being rejected here. So should the CC clear? Guess what? We know the next level is going to be the 786, 31% away, and that is a good long to open up with right there. Okay, and so you can see price action supports that CC. That's why this is the most important level. Okay, this is the most important. The CC is the most important level ultimately, but all coins do love the 786. So I showed you the 382. Okay, now I want to show you the power of the 236 inversely. I showed you when I'm not gonna get any more advanced in this. I'm gonna just show you the trick of the 382, which I already did, and now I'm gonna show you the trick of the 236. All right, the 236. What I use this for is, so if a price is in a strong downtrend like this, you see, how do we know that price is going to move? How do we know that the bottom's in? So if you look at page 180-ish or something on that PDF I showed you, you'll see or like 183, you'll see that it says we can begin to have confidence that the bottom is in on a move downward when the 236 is claimed as support. And what do we mean by that? So we mean this. We mean this high to low. Now let's put our 236 on here. Okay. All right. So look. Wow, this is a great example. I'm really glad I picked it. This is just random, but I want to. This is it just goes to show you how this works on everything. So, price came all the way down. We have our high, we have our low right here, right? Boom, there. I'm just moving this over. Now, don't forget, I'm just moving that over. These are our high and our low. You can see price could not clear this 236. Okay, for many months. 1, 2, 3, 4, 5, 6. On the 7th month, it finally did. It back tested on the 8th month. It went up a little bit more. We finally back tested for the 3rd time, and look at this beautiful bullish candle. This shooting star right here showed that we hit this 236 as support, showing it as support, and now there's our confidence that the downtrend is now over. And look what it did since there. 200% up. So, inversely, don't forget, that is the only time we should be caring about the 236. We should not be worrying about that on any using it as levels to trade off of or anything. I simply use it to find have confidence the bottom is in. Like I said, there's many applications to this retracement. Okay, and this is just another great example of it right here. And I can't take credit for finding any of this. This is all from Chart Champions. Daniel it was just a very obsessive statistician and ran thousands of stats on this to find this. And that's truly why he owes a lot to his success, is his dedication to him journaling every single trade and running stats on this, and not back testing him. He does it in real time. So yeah, that's a great example of showing that. And so look, a lot of times, let me cover this. I forgot to cover this one thing. I think we're almost done here, guys. So I'm going to recap everything one more time. And before I do that, I want to show this. I want to show you, if you're off log mode, like I said, you're going to have different looking fibs here, all right? And so there's no way to teach this. So basically, I struggle at trying to explain this because there's no real way to know if you should be on log mode or linear, or which one's going to be respected, But I find that more often than not, log mode, of course, here's what logarithmic mode is used for. It's used to show for assets that are, if we're on a higher time frame chart, and we have history, like a decent bit of history, or if an asset is very volatile, has a lot of price action, like such as this, or like Bitcoin does, I feel like a log chart is the best to view it on. But there's a lot of old school people who will take their fibs based off of this is sort of a bad example because let me show you what some of these look like. Let's see. Look, see, this is really, look at whatever this is, ASTR. So some people, I don't know why, like this would never be, you can't really see the price pivots there correctly without it being on log mode. Okay, so automatically off the bat, you're gonna know that you're gonna find your fibs here on a log pool. Okay, now if we see something like, okay, we see something like this. See, we're not in log mode here. Okay, we could actually, I shouldn't clear this. I should probably save this. Give me a second. Let me just save all this so I don't erase it all. Hide this. Hide this right quick. Okay. So you can see we don't necessarily need log mode for this. We can see every little pivot point perfectly. And this is an example of probably where we want to use, where we just want to be regular mode. Either or, but more often than not, regular linear mode is going to be If you can do it, if you can find your fibs on linear mode. Like I said, there's no way really to know if it's wrong or right. Except by clicking that button. Okay, with a click of that button, we can see. Look at that 786 hold support. You can see what it is. I mean, unfortunately, it does show support here at the 786 level, but not nearly. You can't nearly see it as much as when we click on log mode. Look at the respect here. Okay, we have our low to our high. Support, support. Come back down. Oh, support. Paying perfect support at 786, and then, you know, so like I said, you're gonna have to click and unclick to make sure, and you need to check them on both. You really do. This just comes with time. Like, I don't even think about it anymore. It just comes with doing it a lot. So yeah, I know I've shown these in higher time frames and stuff, but so I showed the 236, I showed the 382. Let's just recap everything. Okay, so always from wick to wick, always left to right. Supports are found from low to highs. Resistance are from high to low. Okay, in order, the most important, and oftentimes you're going to see this from me. I want to show you this. You're going to see just these two numbers for me, because sometimes I'm just looking, I don't want all that other nonsense. I just want the CC there. Okay, you know, I just want the CC there, and that's all I care about. And so boom, you can see that's what's important. So in order of importance, the 618 to 66, and then should we lose that, the 786 is next. Should we lose that, the 886, and if we lose the 886, then you need to redo another fib pull. And so let's say this was let's just say price action broke through all this, boom boom boom. Well, guess what our next fib pull is? From this impulsive, we need to be having this impulsive in mind next. Okay, so yeah, this can be used with confluence with a lot of other stuff as well, guys. I mean, like for example, take a look at this, how beautiful this is. From this absolute high to this low right here, you can see what do we have in common with the CC. We have a nice horizontal here. That's another bit of confluence for us. Like I said, you don't want to trade just off of these. They're very, very important. So this is a monthly level here. And so that's add a bit of confluence. Yeah, monthly horizontal. Yeah, I know prices come through it already, but still, it is a horizontal there. And so simply put, I mean, the best. I feel like you just need a couple of nice confluences with it, and to make your trade decision. Okay, support. I think I covered everything. Sorry, guys, this has just been really tough.